sooner, before you know it, in the next 10 or 20 years, there's going to be decentralized liquidity pools for the stock market. There might not be ETFs or ARK anymore. You know what I mean? So here we go. So here are the docs, the V2. This is the core concepts of what a liquidity pool is. All right. So let's just use an example of token A. This is what a liquidity pool is, how I'm making money staking my tokens to a liquidity pool, and how we make money off of everybody who trades, okay? So what happens is let's say token A, just for everybody's knowledge and everybody that's going to see this in the future and might see it on YouTube, let's just say token A is Bitcoin and token B is Ethereum, okay? It doesn't fucking matter what it is. Let's just leave it at token A and B, actually. They're just token A and B. It doesn't even fucking matter. So when a buyer goes to a market, let's pull up the market. A swap. Let's do it. Let's do Ethereum to Bitcoin, because then we get a fucking let's do Ethereum to Bitcoin, because then we get a fucking actual fucking thing here. So right now, and let's switch these. 1 Bitcoin is equal to 30 Ethereum right now if you wanted to trade that, okay? And this is a pair. This is a trading pair. Just like if you were looking at stocks over here, all of these are a pair. When you're looking at the chart, like let's look at Apple. This is a chart of Apple paired with the United States dollar. How much is a share of Apple trade for United States dollars, right? When we look at Microsoft, that's a pair. You're pairing Microsoft with United States dollars that are trading, constantly trading, right? Somebody's willing to buy shares of Microsoft for $239 today, right? So there's market makers here. Remember GameStop? There's market makers out there that are controlling and manipulating the prices, constantly putting in buy and sell orders, constantly being makers or takers. If somebody's willing to sell below market value, they're willing to buy. If somebody wants to buy at market value or above, they're always willing to sell. That's being a market maker, okay? A liquidity pool is a decentralized market maker, all right? So let's go back over here. Let's say you had 1 Bitcoin and you want to buy Ethereum. Well, who are you buying this Ethereum from? To get price discovery and things like that and liquidity, somebody's got to be willing to sell you 30 Ethereum, right? Well, you can just get in. Let's go to pools now. We'll back. Dang it. BTC. And let's go to charts over here. Open chart in a new tab. You can get in this pool. You can get in the wrapped Bitcoin to Ethereum pool, liquidity pool. So what happens is somebody comes to Uniswap and they say, I've got 1 Bitcoin. All right. They're buying from the liquidity pool over here. They're buying from this liquidity pool that's got $323 million in it. Half of it's in wrapped Bitcoin, half of it's in Ethereum, okay? And when you're making this swap and there's a price impact, it tells you the fee you're going to pay here. There's a fee, not the price impact, but this fee here, the liquidity provider fee. This is what the pool gets. The pool earns 0.003 Bitcoin for this trade, from this trade. Okay? Now you can see this over here. A trader wants to swap, let's just say because Bitcoin's worth more, Bitcoin's token B. You need 10 Bitcoin to get 100 Ethereum, all right? That makes them equal, all right? So let's say a trader wants to swap 10 of token A, and he wants to get 1 of token B. He sends 10 of token A in, and it gets put in the liquidity pool, 10 of token A. It's put in the liquidity pool. All right. And he takes one of token B out of the liquidity pool. You got it? For that, the pool charges a fee. Now, I own a percentage of the pool, and how do you know how much of the pool you own? Let's say the entire pool, you have to put in equal amounts of token A and B. So it's very important that if I wanted to put one Bitcoin in the XTK and in the Bitcoin and Ethereum pool here, if I want to put one Bitcoin in the liquidity pool, I also have to put in 30 Ethereum, 30.3329 Ethereum. You have to put them in equal amounts, okay? This is important because then you're getting an equal share of both sides of the pool here. Do you understand what's going on here about how you supply liquidity to the trading pool, how you supply both Bitcoin and Ethereum to the pool in an equal ratio? For that equal ratio that you supply to the pool, you are given back a pool token that represents your share in the pool. All right? When you want to exit the pool, when you want your money back, when you want your token A and token B back, you deposit your tokens, your liquidity pool tokens back into the pool. They burn up, and your A and B tokens are given back to you, are unlocked and given back to you. And there's no lockup period. You could deposit your tokens into the pool for one block on the Ethereum blockchain for like 5 minutes, and the next block you can withdraw your funds if you need to. It's not locked up for any amount of time or anything like that. Yes, here's the risk of impermanent loss. Yes, the risk of impermanent loss. So what would happen here? So what could possibly happen here with impermanent loss, to take it a step further, is let's say you're a liquidity provider to a pool, right? Well, all is fine. If token A and B are both going up in value and they're trading, all is fine. Fees are getting made as people trade in and out. Doesn't really matter. What happens when parity stops? Let's say token B is Bitcoin and let's say token A is XTK. You know what I mean? Let's look at our XTK. Let's just look at our XTK to Ethereum pair that we have going on right now. Because this is a very speculative, crazy token. This could drop to 20 cents, right? This token could lose. It gained 200% yesterday. It could drop down 100%, no fucking problem, right? It could lose 50% of its value for here. We could be looking at a 40-cent token, right? Like, this thing could dump. This thing could dump tomorrow, okay? There's nothing about it that, you know, I mean, it's an amazing project, but it's not stabilized in any way, obviously. It just went up 200% in a day. So the problem with being in this liquidity pool of the XTK to Ethereum is you've supplied them one-to-one XTK to Ethereum. Well, if everybody's buying XTK, that's fine. Actually, if they're buying XTK more than Ethereum, let's just put it this way. What if somebody wanted to, because it'll register better in everybody's mind. The worry here is XTK dumps, right? Like the coin's going to zero, right? Well, what forces a coin to drop in value? There's more selling than there is buying, correct? That's what everybody's afraid of. There's going to be a run on the bank. All of a sudden, XTK is trash. The pump and dump is over, and everybody's selling XTK coin, right? And the price is going down and down and down and down as there's more and more selling pressure that just keeps coming in, correct? Well, who's buying? When all that selling is happening, who's buying? And what are they buying it with? Chat? Anyone? The pool. The liquidity pool is buying. And they're buying with Ethereum. So as the price is dumping, you're the buyer. When things are red, you're the fucking buyer. You're the guy going, I believe in this long term. I'm buying. And when it's going up in price, You're the seller. You're the one selling when it's going sky high. When XTK is fucking mooning up 200%, you're the dude selling the top for Ethereum. You're like, oh, you want to buy for some Ethereum up here? Send me your Ethereum. Here's your XTK. Does that make sense? So it almost forces you, it forces you to play the correct game. The game that's so mentally hard to do when you're looking over here and the stock market's freaking out and fucking CNBC is over here fucking telling you the world's fucking falling and dying and fucking Apple's going to zero and you should be buying SQQQ. Kramer's over there telling you to buy SQQQ and Handle's in your fucking chat saying that's the play, liquidate everything, get SQQQ for the day, the whole market's going to collapse. No. That's not what's happening. That's the opposite of the mentality you should have every single situation. You should be the buyer. And when things are mooning like today, when things are going apeshit, and you see fucking Microsoft doing what it's doing right now, you see Microsoft going fucking apeshit right now, you should be the one selling. And that's what being a market maker is over here. Only we don't have access to that. For some reason, I can't buy a bunch of Microsoft stock. I can't buy $10,000 in Microsoft stock and commit $10,000 in cash to it and be a part of the automated market making a part of this. I mean, I guess I could. I could sit here and try and run that all day and program it myself and shit like that. But nobody gives you real access. Nobody gives the everyday person access to this, you know? And that's exactly what these liquidity pools are, with people trading over here, trading cryptocurrencies over here. It's just a different pair of trading. What's funny is trading is applicable in all different types of places. Trading is applicable in your everyday life. You choose whether to go to Wendy's or McDonald's or Subway, and you look at the price and the value of the food, and you're willing to trade your American dollars for whatever your fucking lunch is, right? And you decide. Just like you go to the stock market and you decide that you're willing to trade your American dollars for either Microsoft stock or Apple stock. And whichever pair you choose to trade, you're trading USD to Apple. You're trading USD to Microsoft. Does that make sense? So over here, if you already are going to own Bitcoin and you're going to own Ethereum, you're going to own both over here, why not be a part of the liquidity pool? Why not be a market maker and earn 3% APY on both your Bitcoin and Ethereum that you hold? Why not be a part of the liquidity pool? Right? Was that a good explanation, Big Herd ATL, on how liquidity pool works, how you can be a market maker and join a liquidity pool, and how you collect fees, how the fees work, and what the risk is of impermanent loss, of if the coin dumped. So if somebody dumped and you were the buyer of XTK, you're going to be selling all your Ethereum. All the Ethereum in the pool is going to get sold to buy all the XTK on the way down to zero. And at the end, when XTK is at zero, the pool is going to be left with a fat bag of XTK and close to zero Ethereum in it. And that's the same on your personal level. If XTK were to dump, if you choose a highly risk pair that has a high APY, you know what I mean? You have a higher risk of this XTK coin fucking dumping, you know? Forces you to do the right thing, buy low, sell high. Yes, but you got to understand where that can hurt you, and where you as a human being have to then monitor that. Like if you think it's going to zero, you need to remove your liquidity from the pool so that it's not buying all the way down to zero. You know what I mean? That's the risk you take. Also, you also, to the flip of that coin, you lose a little bit of the upside. Because as XTK token is going to the fucking moon, as it's going up, and people are buying it like crazy, and they're willing to pay more and more for it, who are they buying it from? They're buying it from the liquidity pool. So this XTK tokens in the pool, XTK tokens, as the value goes up, less of it needs to equal Ethereum. You know what I mean? The amount of XTK it's selling. You're selling into the hype as well. Franz, it would have to go to zero. Yeah, you would it would need to be like a rug pull, Franz. Like it would need to be like if you believe in it long term, if you believe in it long term, and it's just the volatility of the day to day trading. Like yes, we ran up 200% to fucking 83 cents. Like it could pull back. The pool could pull back 40%. You know what I mean? If this went down to 40 cents an XTK token the whole time, the pool's buying. But I believe in the project long term. That volatility is actually good for me. The trading back and forth is good because the whole time the coin is trading, every trade that comes through, I'm getting a percentage of the fees that come in. These fees that are coming in. You know what I mean? So as long as the coin isn't going to zero and you believe in the project, you just leave it in there. And the price, this is what's great about it. The price of the coin starts to not matter anymore. What's kind of funny is these smart people on Wall Street have figured out how to de-risk this game. You know what Kathy Woods and ARK does? They're market makers. You know what ARK is? You know what ARK K is? When she's like, yeah, I'm out here like investing in CRISPR, and she's investing in let's just call it CRISPR right here, CRISPR Therapeutics, or let's say she's buying Tesla. You know what she's fucking doing? She is the market maker. She's bought thousands, millions of shares of Tesla. And when Tesla's going up, she's the one selling into all the retail buyers being hyped. She's the market maker. She's playing market maker. And when Tesla drops, she has enough conviction and she's also raised enough cash from selling into retail on the way up. You know, like right now, you should have been buying on the way down, selling on the way up. You should be selling right now on the way up. Little percent every time it goes up, little percent sells off. You know what I mean? To have cash. And then when it pulls back, like we all know it will, you should be buying on the way down. That's all ARK and market makers are doing. And they have the money to do it. And you could sit here and do it yourself. You just can't automate it like these people can. And you could invest in ARK and let them do it for you and take a fat fee, but all of that's getting decentralized. Like sooner before you know it, in the next 10 or 20 years, there's going to be decentralized liquidity pools for the stock market. There might not be ETFs or ARK anymore. You know what I mean? Like there just might be a decentralized fucking liquidity pool for trading this type of stuff. XTK to Ethereum here. I just like leaving this up. $50,000 in fees in the past 24 hours. I like to see that number going up. It was in the 40,000s last night because the more fees going up, the more money I'm making in fees. You know what I mean? Long time. What's good, my dude? How have you been, Sergeant Goku? S Sergeant Goku. What's good? What's good? What's good? And the fees, when you collect fees, it's paid in Ethereum and XTK coin. Like you're earning more XTK and more Ethereum. So I'm bullish on both Ethereum and XTK. I'm bullish on Ethereum and XTK. I want the fees and I want to collect both coins. Does that make sense? Rodney, I own 0.58 of a percent. I own like a little over half of 1% of the XTK Ethereum liquidity pool. You guys know how big of a deal that is? We still have 1 to 2 years to get this money before institutions get into a automated market making. Dude, I think they're in here. I think they are in here. I was telling this to my buddies. All these people that are going to be at this Bitcoin fucking conference and shit like that, dude, everybody that's at the Bitcoin conference is going to be like, they're all publicly on Twitter, like shilling Bitcoin only, Bitcoin only. Some of them are starting to say Ethereum. They're like, no, Ethereum. Like the Winklevoss are like, no, you need Ethereum and shit. All of those people are 10 steps ahead of what they're telling the general public. They're telling the general public, yes, buy Bitcoin, like Goldman Sachs and all that shit, because they've already bought it. Tesla, when Elon Musk comes out and says he bought Bitcoin, Tesla's using Bitcoin, he says it after they already bought it. So nobody's out here like me shilling XTK Ethereum before they themselves buy it. You understand? The Bitfinex says the most of the big boys are waiting on the sideline. He said one of them is a top 4 bank worldwide. Oh, I bet. I bet, Moss. I bet. There's a lot of personal money that's flowing into this, though. Like, when you look at these fucking pairs, I mean, dude, there's a lot of money in this fucking thing, dude. There's fucking $32 million in liquidity to WBTC to ETH. Selling, buying from money laundering? Yeah, I understand that. People got the money in here, though. They trust me. They tell you they're worried. They're like, I'm worried. I'm not playing with it yet. You know, I don't know. I'm not really sure. You know, but they're fucking, their money's in here. There's 300 million here. Fucking 300 million here. 250 million here. 224 million here. 200 million, 180 million, 120, like there's billions of dollars. The overview, there is $5.27 billion in liquidity on Uniswap alone. This isn't even the only one. $5 billion in liquidity on Uniswap alone. $1.4 billion in the past 24 hours was pushed through the system. Individual money for sure. It's definitely all like hidden individual money. Like institutions aren't really fucking with this yet, but they're buying they're scooping all the Bitcoin and Ethereum they can to fuck with it. They're like, yep, we got fat bags of Ethereum and Bitcoin, and as soon as that shit hits and we're allowed to do it, we are in this motherfucker. And some of them are already tinkering with it with large personal bags, because you can't. Here's the thing: is you can't even tinker with this shit without 10 G's. Like, you can't even be a part of this. Like, the Ethereum fees are so high right now that you can't even be a part of this unless you're balling right now. Which is why I'm super hype. Tomorrow, we have a guest tomorrow at 11 a.m. All right? We have a guest tomorrow at 11 a.m. for decentralized finance on Cardano. And the owner, DC, Dwayne Cameron, we're about to have Dwayne Cameron on from Liquid Finance, which is decentralized liquidity protocols for Cardano. Earn interest on deposits, borrow assets, build censorship resistance. Dwayne is coming on the show tomorrow. Dwayne Cameron, the founder, is coming on the show tomorrow. I'm not making any moves. I'm letting my X token rage, dude. The returns over here are too high. You need to cut it. There's only 31,000 pool tokens. I have almost 389 of them. Or I have 398 of the liquidity pool tokens that are out there. So when you deposit Ethereum and XTK token into the liquidity pool, you get the XTK Ethereum LP token. You get the XTK to Ethereum LP token. Okay, XTK to LP token. I'm staking that liquidity pool token back with the company right now. $70 to do this, yeah. I believe that. So I'm staking. I went and bought a bunch of XTK, the actual coin. I paired it with Ethereum and put it in the liquidity pool. I then took the liquidity token that they gave me to represent my money in the liquidity pool, and I went back to the X Token Cafe company and I gave it back to them to stake with them. So now my liquidity pool tokens are earning more liquidity pool tokens. It's like money, it's compounding interest. So while the liquidity pool is over here earning 85% APY, you heard that right, my money is going to double in a little over a year. It's going to almost double in 1 year, okay? 85%. Then that, and my money that's in this liquidity pool that's doing that, is over here earning 378% APR. Does that make sense? Do you understand the coinception that's happening here? Thank you for watching the YouTube videos. We really appreciate it. Don't forget to hit the thumbs up button, subscribe, comment down below, help us out with the YouTube algorithms. And we're live 5 days a week on Twitch, 7 a.m. to 2 p.m. EST. Come check us out. Thanks for watching.